investing in cash flowing assets is always the way to go. I think people need a place to stay. People need a place to live. I think what happened is that there was such an increase in people that got into multifamily syndication.
Yes.
Like, somebody said it went up like a couple 1,000% of the amount of syndicators that got in over the last like 4 or 5 years. Mm-hmm. So, that's when you have to pivot. But then at some point, it'll be a great time to invest in multifamily again. I mean, I think it's always, you can always find opportunities in multifamily.
I agree. Cash calls are pretty hard hit, and people don't like them. But you're right. I mean, what's the future holds is again to not, most everybody else, syndicators have stopped giving cash flows because they want to preserve, with this uncharted grounds. They just cannot give a little bit money. Well, good morning. I'd let Beau start the show today. Yeah, Beau, brother.
Yeah, I think a lot of the people that watch our show, they want to know these questions from a real estate investor doing bigger deals. So I think first question that's been queued up is, what is your investment strategy? What's your overall approach? Can you kind of give us an idea of how that's changed over the last year or so?
Sure, Beau. Thank you for asking that question. Somebody who asked us, the key thing is with the market changing in the last 4 or 5 years, what I've seen, I've been in it for about 15 years now, more than around there, in multifamily, in commercial space, Beau. But what I've found is that it was a seller's market, big time, for last 3-4 years especially. The buyers were there. They had the powder or the money, and the banks were giving loans, except for like last year, the interest rates went way up, and this year also they went way up. So a lot of people bought these things or commercial properties at a higher price. And in my case, I've been selling properties actually, because I found that if I can get equity gains higher and still have meat on the bone for other people, then why not, right? So in my portfolio, I've been selling it, but I've been pivoting also into senior living, because with silver tsunami, the demand is there and it's going to stay there, but COVID has not helped there either. Oh, what happened with the COVID? The banks got shy in giving construction loans. So there is a kind of challenge in that field over there also. But multifamily as a whole, I have been just buying like just one I bought last year, one I bought year before, and one I bought 1 year before, and then 2 before that. So only 5 deals I bought in the last 4 years, just to be very transparent with everybody. But the thing is, we've been selling portfolio like a lot of other shrewd, syndicators are. The key thing we see right now, we have to kind of wait and see, have the money ready, so that as this market develops and a lot of these bridge loans are coming due, which a lot of people are listening and watching and looking at the reports, $1.3 trillion I was told, right, is coming due. That's going to make havoc, especially Powell didn't do a good job this week. Market is tumbling like crazy. And, that's not going to help much, because they're saying the interest rates may stay at that level longer even now. We were thinking that they might be cut in 2024 after the hike in November this year of 0.25. Nobody has a crystal ball, but the market is just selling and selling, stock market, because they feel that maybe these interest rates are not going to come down as they expected in 2024. It's a long answer, but the big thing is I found a lot of my other partners, they've gone into some other than real estate. They've gone into businesses like you and I have talked about, franchises and laundromats and ATMs and buying manufacturing machine properties and so on like that. So I
Yeah.
think in my case, in Monil case, my daughter and I, we've been kind of really holding back a little bit and trying to see some other thing we talked about yesterday with my other partner was maybe giving 1 million, 2 million to save the day for some of these people, good assets, A class assets or A minus assets. If they need some injection of money but they can't raise money, then we are thinking to maybe come
Ah.
out with our side and have it take a first position, right after the bank or something. So we are debating.
So,
But will that
y- y-
Mhm.
yeah.
Go ahead?
So
Go ahead.
okay. If I heard you, that's an interesting strategy. So, some sponsors get into they're in bridge debt right now on a multifamily asset, and basically they can't do any more capital calls. They might have, they might not have the bandwidth to do that. So then you
Yes.
can come in as almost a debt instrument that
Yes.
takes a junior position to the senior debt, but then
Yeah.
you're superior to the limited LP investors. So that's actually a really
With the
strong investment because I'm doing a deal right now and I'm helping somebody finance actually a bridge to bridge on a multifamily. And
uh-huh.
if we weren't able to get the loan proceeds, so we sized it up and I think we're going to be able to do it getting another bridge loan. It's very hard to go bridge to bridge, but if we needed
Yes.
to, we could have a group like yours come in with $2 or $3 million, which
Hmm.
would be superior in lean position than the LP equity.
Yes.
But it would also save the day. So you
Mhm.
guys that come in with the new capital are way safe compared to the LPs, but the LPs would be in bad shape because they're the ones that are going to take the haircut because the operator would have had to sell an unstabilized
Yeah.
asset and the broker's opinion of value, they would have taken probably a $4 million haircut. So it's kind of the save the day funding that I think that's a
Uh-huh.
great point. I think this is a good business model right now to go into
Thank you.
because
Thank you.
it's
I
not that.
don't know. We've been debating like what could be that premium we should get on our money. So, that's something if they were to go out, first of all, we have to underwrite the property and make sure in 2 years or so it's going to come back up, right? And it will save the day for the investors, definitely. Otherwise, it could go into foreclosure and they will lose everything. So, what's the premium if we are bringing 2 million or 3 million to save the day? What kind of, you know, can we expect? I
So,
think that's my question.
so, so yeah, and I would say it would be a combination of yield, meaning like almost like a debt instrument, where you're getting, so let's say 12% plus a portion of the equity. That would be pretty good, right?
Yes,
Right. So
that
you're
would be
you're
very good.
guaranteed this return, and then when they go to take you out on the refinance, when they're able to stabilize and go to agency debt, then you're
Yes.
getting a kicker. So you're getting equity, like based on that appraised value, you get X percentage. So they have to pay you. You came in with 3 million. You've been getting a 12% monthly, just like a hard money loan almost.
Yes.
And then at the end, that 3 million plus equity gain kicker of
Mhm.
another, 10% or whatever that is. So then you made 3.3 million plus the 12% interest on the loan. So yeah, that would be good. I don't know if that's the model, but just thinking,
No, that's what we've been
yeah.
debating. The question was, what can we expect? And I think the other part is how desperately the other party needs our money. See, that's going to be dependent too, right? We only want the best of the best assets in best areas, which we can dictate, right? Because there'll be so many out there. So we'll have to really make sure we are giving our money to safe people, good operators. That's what we talked about. And a property which really carries the meat, which will be able to refinance and in 2 years or so. It will be a short term, you know, debt that will give. So it's a debt play, which I've never played before, by the way. So I think the exciting thing which I like in the whole thing is when you are the CEO of a company, you're always looking at how could we pivot, how could we change to see the marketplace where our investors can get returns?
So where else are you seeing sponsors struggling besides multifamily right now?
I would say multifamily is one, construction per se, everywhere. Some of the developments, I just saw a report where construction loans have decreased, but the permits have increased in certain areas because people were already planning these developments. But this whole debacle of interest rates has threw a shoe now where these monies they raised for the land and development cost and all, it's going to get longer and longer further down, and the cost of construction is going up. I cannot believe that. Inflation, we are trying to reduce inflation in USA, but the cost of material is going up, brother. Oh my gosh. I mean, this COVID has its after effects. And now I'm finding, even being a syndicator myself and developer, how hurtful it is, to the real estate, industry actually. And by increasing these interest rates and keeping it there, it's going to hurt even more. So
Yeah,
hospitality,
it's
for
really
example, right? Yeah, hospitality is the other one.
it's re-
We're trying to pivot to it. The problem I find over there also is that the ADRs have gone up, occupancies have gone up at the tourism places, but the construction loans are high, interest loans, and the cost of material has gone up. So if, like in a hotel, you started 3 years back to start to get a big name brand to buy it, give you the name, and then you started developing, all these different plans and everything, and the cost of 2 years back was way different than the cost of constructing that hotel right now. So it's just a mishmash of
mm,
so many, things that we just never thought that COVID is going to bring. I don't know if you can blame everything on COVID, but inflationary measures, which again, by producing so many trillions of dollars of money during COVID, it has given the buying power of the consumer so high that they are able to still buy groceries and still buy at higher price. And that's where the inflation has come.
yeah. Well, the thing is that I think the word pivot is a great word to be using right now. And the fact of the matter is you always have to be able to pivot. It's the ones that can pivot that survive. The ones that can't pivot because they don't foresee, they put their head in the sand and they don't pivot.
Yeah.
They get slaughtered, right? And so it's a time of
So,
pivoting.
mhm,
And so I think a lot of that is what we're dealing with right now. But the weird thing is there's still a shortage of housing, and
yeah. Mhm.
which is the single family space, which usually gets hurt first before multifamily. It seems vice versa now, that the single family is doing fine. I don't know. Yeah, it's definitely interesting times, but yeah, construction in general right now is costing so much. Now, your multifamily strategy that we are just talking about, what markets would you typically invest in those type of deals? Would it still be the Floridas, Texases of the world?
Yeah, that is where the demand is. I don't know why. The migration patterns, we look at those quite a lot, which everybody should look into those. Like Knoxville, Tennessee, people are coming in. Nashville, people are coming in. Carolinas, people are going there. Florida, people are coming in. Texas, always people are coming in. I mean, so the big thing I find, you're right, a lot more jobs are coming there too. See, that's the thing. I just heard like Amazon is going to be employing 250,000 workers more, workers, real people in their plants because of Christmas coming up. Because the online business is taking a huge growth. I mean, it's going to be even bigger this year. The shopping malls are declining and the strip shopping centers and everything. So it's the whole landscape is changing. It's whole landscape. So I think those emerging markets are safe bets in my thinking. I know for the Seattle or Oregon area, I know we are working on that also with the Bend, Oregon, which is a good superstar. Now, Los Angeles, hold on. I just read a big report yesterday. Los Angeles, so much shortage of, housing over there and affordable housing. That's the other part. I think a lot more affordable housing needs are there in this country. So the mixture, I'm just kind of in a crossroad here, and I think most everybody is, in the real estate commercial world, as what is going to happen with the interest rates, because so much is riding on that. So much is riding on it,
Yeah,
you know.
and actually, the federal government, there could be a shutdown at the end of the month. The whole
I
government could shut
know.
down. That's
I
yeah,
saw
right.
that.
And so
That will not happen. That will not happen. They never let it happen. They always have
yeah,
that. They're going to increase that limit. But you're so right. But the thing is, average person who's got retirement funds of so much and baby boomers, 10,000 retiring every day, those baby boomers are probably left the job. you know they have certain amount of savings that they want to live off on, and with interest rates going high, it's better for them actually, because they are able to get 4.5% interest on their money and all that. But other side of it is when they have stock market their money into mutual funds and whatever, and the market dropping, they are getting hurt on that side. It's small increase in the interest rate on this side on their savings cash, but the mutual funds and stock market and their 401ks, it's decreasing there faster than what they're making. So it's a pretty difficult situation. Being number one nation in the world, being USA, we are the leaders, but some this turmoils, I don't know how it's going to shake out. The bonds are going higher, and as that's big macro and micro economists. We should bring them on, brother.
yeah.
They
No,
can
it's fascinating. But I think,
yeah,
investing in cash flowing assets is always the way to go. I think people need a place to stay. People need a place
yeah,
to live. I think what happened is that there was such an increase in people that got into multifamily syndication. Like,
yes,
somebody said it went up like a couple thousand% of the amount of
yes.
syndicators that got in over the last like 4 or 5 years.
Hmm.
So, that's when you have to pivot. But then at some point, it'll be a great time to invest in multifamily again. I mean, I
Yeah,
think it's always, you can always find opportunities in multifamily. I think
I agree. I
right.
totally
Like, and
agree.
so like at what point are those, some guy that I interviewed on the podcast, he always talks about making surges of income, right? And that's kind of
Mhm.
the Vinney Chopra syndication platform was always getting there first and
Mhm.
making surges of money, right? In the multifamily space. And it's not holding long term. It's because you were able to like get, 50% increase on the value of your properties by forcing
Yes, yes.
appreciation and making big windfalls of cash. So at some point, again, there'll be opportunities, which could be right now by fixing people's bad bridge loans and helping them stay alive. And because you're
Mhm.
helping them stay alive, you get a bigger piece of the cake is basically
Yes.
what that strategy is. And I like
Yeah,
that strategy. I think that's a win-win strategy.
I
You
agree.
help a sponsor save the deal because they probably have millions of dollars of investors' capital. You
Mhm.
make great returns for your investors, and
Yeah,
everybody wins because that deal would have sold. They would have had to list it,
yeah.
and
So that a deep
so
discount, deep discount. You're
yeah,
so right. In this market, people are looking for 30%, 35% off the replaceable cost or what they're worth, or even 40. I hear some people were saying, Vinny, as it gets to be worse later part of this year and next year, it's going to be difficult for people to survive, because cash calls means that you have to ask your present investors within that LLC to bring more money to save the day. right? And I've
Mm-hmm.
never done a cash call. I've just had some promissory notes that I did last year from some of the investors, but they chose, to come up, and give the money to us. Cash calls are pretty hard hit, and people don't like them. But you're right. I mean,
Yeah.
what's the future holds is again to not most everybody, all syndicators have stopped giving cash flows because they want to preserve, with this uncharted grounds. They just cannot give little bit money. When I say little bit money, if it's a pref of 7, you're getting, divide by 12, right? So you're getting point zero something. But if that money is protected in the LLC for rainy day or whatever might come, interests, the insurance has gone up. That's a other problem, which has happened in these states, Midwest states, Texas, Florida, you name it. The cost of insurance has gone skyrocketing, and then the bridge loans and the variable rate loans have made the mortgage go higher, and that's why the syndicators, they are telling and educating investors, please give us some time so that we can get this, go through the wave of this high interest rates and all. Yeah, it's a
Yeah.
tough
Yeah.
game. It's a tough,
Well,
tough time for everybody.
yeah.
Yeah,
But resilience is the key. We got to all be resilient
yeah,
because if
yeah,
that's the thing, everybody is loving life when things are going well, but the reality of life is that sometimes there's the teetering of the saw, and sometimes you have to be able to withstand and be resilient and work things out. But the good thing about real estate, it's very forgiving, and
yeah.
you usually can work out these rough economic standpoints. But thank you for all the insight today, you guys, and
Thank
especially
you,
Vinny.
guys.
It was really good.
Thank you so
Thanks so
much. And
much.
please send us some questions, guys, because Beau and I are here on Vinney and Beau show. We have been doing it for many years now. We want to help you with the topics, with different things, with, giving best loans. Beau is master at it. He's now the guru of franchising, and he's got lots of great ideas and things. And the beauty I like about Beau, I want to give him he didn't ask me to do this, is that he finds ways. He's got so creative mind to find the money for you, different ways. And that's beautiful. You want in a loan broker and a franchisor that. And if you want to, if you're accredited investors or sophisticated also, we take both. And reach out to me, because there'll be opportunities coming. They are coming, just like Beau said. Perseverance is the key, and then finding and pivoting is the key. Thank you, Beau.
Thank you very
Thank
much.
you.
We'll see you all in the next
Yeah,
episode.
we'll see you next episode. Thank you.
So happy to be on your show finally.
I'm a long-time fan, and I watch all your guys' content.
Awesome. We're very, very, very invested in our community.
It's wonderful to be here.
This is Vinney Chopra, and also my good buddy Beau and Steve. And we are so happy.
It's amazing what's going to happen. So, we're amped up to do the show, and we got a lot of hype about the guest today, so I'm excited to.
Oh, I know. So excited to come live to you all. Come to you live 9:30 every Friday. How to take your business to the next level.